Hello and welcome to another update video about Bitcoin. In this video, we're going to take a look at the Bitcoin chart, and there are a few interesting developments in the chart that we want to have a look at together. Bitcoin currently at 38.8k, pretty much sideways movement you can see in the last 24 hours. Now, no movement at all. Yeah, so let's take a look at that. What I find very interesting, and when we talked about it in the previous video anyway, I'll zoom in a minute, but first of all, maybe for everybody who's new on the channel, my primary expectation is that Bitcoin is here in this ABC correction within a wave 2, as per the Elliott Wave method. Within this wave 2, we are here still in this potential wave 4. So as per the Elliott Wave method, within a wave 2, you get your ABC. Within that, we are in the wave C, and the C wave again consists of 5 waves. And we are possibly still here in the 4th wave, but maybe already in the 5th wave. And that is still what we don't know. What I need to tell you is that this is looking like, a wave 4 generally takes a long time. We saw that here, and all of these were wave 4s, yeah. And we always had a lot of time that passed in this wave 4. The longest one that we had here so far in the last few months was the one that started on the 4th of December and lasted until the 27th of December. Yeah, so this was a wave 4 as well. It took really a long time. We are currently here in a triangle, and these triangles in the according to the Elliott Wave method, they often happen in a wave 4, after which you then get your wave 5 to the downside. Okay, so this is my primary expectation anyway, that we are heading down after this primarily into my target range here between 20 and 29k, and the assumption that this is still a wave 4 would obviously be you can call it a potential additional factor that supports that idea that this is a wave 4, because again, based on the Elliott Wave method, these triangles, you can oftentimes find these in a wave 4. Yeah, but that doesn't mean we necessarily need to break to the downside. There is the alternative where we could break to the upside above 45.5k, then get into this green range here between 55 and 65k, and would then come down, yeah? Because this structure would not support higher highs, because we have not completed the correction yet. We need to get that lower low in before we can really move to new all-time highs. Yeah, that is important. That is absolutely important. We need to tidy that structure up, because only then you can move to new all-time highs. You need to have a clean ABC correction. What is really happening here on the chart is very interesting, because if we take a look on the 4-hour chart, you can see here this ascending trend line. Yeah, this ascending trend line here that is forming the lower trend line of that triangle pattern. Yeah, and you can see that we only earlier today, yesterday we touched here this trend line. What is important though is on the daily chart. If you take a look on the daily chart, it looks interesting, more interesting, and it reveals something for us. It reveals that this daily candle here closed lower than the other ones. Yeah, so not necessarily lower, but it closed below another trend line. So if I draw a trend line here like that, yeah, base it on the closed candles, then for the first time since the 21st of January, for the first time ever really, a daily candle closed below this ascending trend line. And that is interesting and important. The current daily candle is back above that trend line, but we still have a chance in the last few hours of today's candle, or of today, that this candle closes below this trend line. And if that happens, yeah, and this trend line, by the way, is at 38.4. If you close below 38.4k today, that would mean that we broke this trend line to the downside, and the potential retest that we're doing now was successful. And that would, in my view, confirm or make it much more likely that in the following hours or days, then we are going to head further down. So that is quite significant, that this daily candle close was below this trend line. Yes, we have since then come up higher, but again, the daily candle isn't closed yet. So from my point of view, it's very important what this daily candle is doing. Yeah, and again, if we go to the 4-hour chart, or maybe even the 1-hour chart, yeah, we can here see the potential forming of a M pattern. Yeah, and this is a little bit bearish. So you can actually see that that second low, that second high is even lower than the first one. So you get that, and if that breaks this trend line, we're going to head down here, and the next target for that would be 37.7k then. So I find that very interesting. That would confirm generally my view that we are heading further down. Find that very interesting. And the other interesting factor here is what I wanted to show you is on the weekly, which also points more towards my primary expectation, is if we take a look on the weekly chart, and on the weekly chart here we are activating the EMA ribbon, then we can now see that these EMAs are starting to cross to the downside. And if these are starting to cross to the downside, you get, after a while, you get a short signal. This is bearish. These are bearish crosses. And when that starts to happen, this is really bearish. And that could be another accelerator for the price to be pushed further down. You can see that throughout this whole period here, the weekly EMAs, they did not cross at all. We now, for the first time in months, we have a situation where these EMAs are starting to cross bearish. You can see that, where they now start to cross bearish one after the other. That is really, really bearish. The last time we had a bullish cross, that was, I think, here after after March 2020. You can see that long signal here on the chart when they all crossed bullish. Well, after that, the price moved from around 8k to, well, in the end, 65k, or nearly 70k, isn't it? So that is significant, yeah, and that is what also confirms my view that we should really see here an imminent sell-off, yeah, and also the fact that here on the weekly chart we have really been in the lower end of this triangle, yeah. So you can see that on the weekly. It becomes a bit more clear on the weekly than on the daily, and this is really what I wanted to show you. You can nearly see how these weekly EMAs are pushing the price down, and also all these candles, these sort of pin bar candles, are really bearish on the weekly. You can see the volatility throughout the week, but the price was pushed to the lower end of it. And all of that together is really, for me, another sign that we could really have an imminent sell-off to the downside here, yeah? That is what I'm waiting for. It has been a few weeks now in this triangle, but it's time that we really start to move down. Of course, it is still possible that we break here to the upside, but my primary expectation is and has remained to be the immediate or the imminent sell-off to the downside. From this yellow target area, then we would at some point complete the correction and can then move finally to new all-time highs. That is what we need to see. Hopefully that was some those were some additional and new insights that I haven't talked about before. Those EMA ribbons on the weekly that are starting to cross, plus this orange trend line that really I only saw earlier today when I noticed that daily candle closed actually below that one. So I found that quite interesting. Yeah, that's my view here on Bitcoin at the moment. I'll keep you updated. Of course, you won't miss a thing here. If you don't want to miss anything yet, then subscribe to the channel. If you really like the content, then check out maybe the channel membership, where you can get access to the Telegram live chat, the Discord server, and also a weekly live stream. Thanks a lot for watching. Bye-bye.